continue to talk about the main tendencies of future economy here on the main blockchain and cryptocurrency conference in Eastern Europe. Here with me is Simon Dixon. Hello, Simon.
Hello, thanks for having me.
CEO and co-founder of online investment platform Bank to the Future. Am I right?
Yeah, banktothefuture.com.
Yeah. And the person who have invested over $190 million in FinTech companies. According to analysts' estimates, only in 2016, probably more than $100 million was raised on ICO. In 2017, it expects to be increased at times. But experts say that the most of the companies that enter the ICO doesn't meet the expectation of investors. How can we evaluate a project, deciding to release tokens, and choose the project that doesn't bury the investment?
Yeah, well, I mean, traditional investing in private equity, because before tokens there was equity, and angel investors used to invest in them, and they expect of 10 investments, 1 to succeed, and that 1 should grow so large that it makes up for the loss of the other 9. That's traditional investment portfolio strategy. The difference with ICOs is it allows, at the moment in its existing format, anyone to invest small sums, be way more diversified, and it's completely global. So, it's being done online. So the same rules apply, you can imagine, but because it's there's less due diligence, it's a bit more, rough around the edges, you can imagine more will fail. So the failure rate is going to be high, but the interesting thing is because with ICOs it creates a token rather than equity, and it trades on the market. Even if a project fails, that token continues forever, and people tend to speculate on it and continue trading forever. So these things don't actually die; they just continue trading, and it's interesting to see where it's going to go next.
Quite interesting. There are quite a big amount of unsuccessful ICO, and many projects do not raise money at all, or they raise obviously insufficient amounts of money. In order to hold an ICO successful, you need to conduct a marketing campaign. How should investors find a good marketing campaign, and how should companies provide a good marketing campaign?
Yes, that's why ICOs in the end, I don't think it actually serves the very early startup, because doing an ICO is almost as expensive as doing an IPO in the traditional markets. You have to invest significant resource. If you want to do this compliantly, you have to invest a significant amount in lawyers and legal fees. What we're seeing right now is people just ignoring compliance, ignoring everything else, and kind of just putting their idea out in the world. This has created a real problematic where people are now, rather than deciding that they wanted to get something funded, they're saying, what can we do in order to get some ICO money? So this causes lots of problems. It's a very buyer beware environment. On the flip side, very successful companies are now using a token strategy in order to align the interests of their customers, their investors, the business, and all of its stakeholders. So it can create a really interesting effect. The analogy I like to give is, imagine if Tim Berners-Lee, who invented the World Wide Web, imagine if he actually did an ICO, if it was possible at the time, then he would probably be one of the richest people in the world, because the token tends to move in value depending on the adoption of the technology. Instead, Facebook, Google, and all these different companies that built on top of Tim Berners-Lee's technology became very wealthy. So it creates an interesting dynamic for technology that doesn't really have a business model, and also very successful companies that already have a business model, have customers, to integrate a token to take their business to the next stage, and really not need any funding in the future, not need to do an IPO. But it's being used by very early stage, inexperienced people right now, and almost all of those will fail, but there'll be a couple of gems that come through, and it's just kind of buyer beware.
And what the percentage between successful and unsuccessful ICO in stock exchanges?
It kind of depends on your definition of success. So some entrepreneurs consider it a success when they raise the funding. Actually, the success is when people make returns and the technology gets built. Very few of those right now, but we've seen the main user case, the main one that's emerged was Ethereum, and Ethereum was founded by somebody from Russia, Vitalik, and that went on to produce almost similar returns as if you invested in the seed round of a company like Google.
So today we talk a lot about digital economy, about cryptocurrency, blockchain and mining, but what was in the beginning of it?
So Bitcoin was actually created to allow people censorship-resistant money. By that it means that because you can own your own money and you can send it to anyone else with no requirement, anyone that downloads this software, you can take the money that you own and send it to somebody else. Then it was originally designed for that. So the original user case of blockchain was money, and it was Bitcoin. And Bitcoin is still the most successful application of blockchain. Blockchain is just part of the makeup of how Bitcoin works, and then people have taken that and tried to do lots of different things with it. We haven't seen too much of that succeed yet right now, but the main disruption that we're seeing is anywhere where censorship exists. So rather than doing IPOs, it created ICOs where people could raise globally. Rather than go into a bank, it created Bitcoin where people can transact globally. Next, you'll see remittances, and in the past, it's being used for things like gambling and other things that are a bit more controversial that you can't get banking services for.
With blockchains having a third party in a chain makes them open for frauds. But what's the solution?
When you say it makes them open for fraud, do you mean it can be used by criminals?
Yeah.
Yeah, so everything can be used by criminals. Criminals use US dollar a lot more than they use the Bitcoin. Criminals use the Russian rupee more than they use Bitcoin. And you rely upon law and crime prevention and in order to track down that crime. You can't make the US dollar illegal because someone used it for crime, just as you can't make shoes illegal because a criminal used them to run away. So it's a very silly thing blaming the currency when the technology is just, the thing that legitimate people and criminals can use, just like criminals use the internet.
I mean, just there is no regulation rules in cryptocurrency market.
Yeah, so the underlying technology, for example, the protocol that sits behind Bitcoin and sits behind Ethereum, is unregulatable. There's no jurisdiction, there's no borders. It doesn't care the color of your skin, your sexual preference. It doesn't care what your country wants to do. It doesn't care how you use it. It's just completely neutral form of technology that has no opinion, no judgment. However, if you're an institution, a financial institution that wants to create an exchange or something, then that will need to be in a certain jurisdiction, and then if you're in the borders of that country, then you're subject to the regulations of that country. So it's being done in the right way. The institutions that do stuff with this technology are being regulated, but the protocol, the underlying technology, is unregulatable, and no one can claim jurisdiction over it.
And in your mind, do you think should it be regulated?
The underlying technology should not be regulated. The financial institutions that are providing financial products need to be subject to all the regulations that traditional companies have, but they can also use technology in order to create innovation and regulation technology as well.
And what determines the attitude of different countries to cryptocurrencies? Why do some governments accept them and the others persecute them?
The same reason why markets move, fear and greed. Some countries fear Bitcoin, others see an opportunity in Bitcoin. Everybody is leaving. There's such a migration away from traditional finance over to Bitcoin and blockchain companies. Banks are losing staff left, right and center. They're coming along and they're creating their own technology startups using some of the experience that they gained in traditional finance. So, a country like Japan comes along and says, we can't stop this thing, but we can embrace it, we can take all the jobs and we can do all the innovation within our country. And so Japan's doing that. Whereas China, they came along and said, we just need to bar it, we need to shut it down, we need to get rid of it. because they traditionally want more control. But it just means that all the innovation goes to another jurisdiction, all the jobs goes to another jurisdiction, and the technology is still used. So it's kind of the government's appetite to how much they want to control, or whether they think they can embrace a new trend, create prosperity in their country, and create new jobs, because jobs are flying in this industry, and it's hiring an incredible amount of people. An incredible amount of talent are now migrating over to this industry. So that's an opportunity for some, a threat for others. It's the emotions of fear or greed, and which one the government decides is right for their country and their policy.
Okay, thank you so much for the interview.
Okay, thank you.